If you're looking to get started trading in 2025, don't worry, you clicked on the right video. After 11 years of trading and making over $11 million of trading profits, I'm going to be breaking down how you can start trading with minimum confusion and maximum clarity. This is the exact roadmap I wish I had when I first started trading. I'll cover everything from brokers to use, strategies that are working in the current markets, and the right mindset to approach trading with. And the best part is you're not gonna need a huge account. I'm gonna show you how you can get started trading with minimal capital as you scale up your skills. So let's dive right into it. Let's talk about why day trading. Why is day trading a skill that I believe everybody should master? Well, honestly, it's one of the few skills that's gonna give you time freedom as well as money freedom. It's the only skill in the world you're not gonna have to deal with customers, you're not gonna have to deal with inventory, you're not gonna have to deal with running a business that something may happen at any hour through the day. It's one of those things that it's you versus yourself versus the markets. You can do with a couple of hours a day. Doesn't matter where you live, and the barrier of entry is very small. In the last 3 years alone, I was able to trade from 50 different countries. Tell me what other kind of business you can do that in. With abundance of free online resources, commission-free brokers, Profirms, there's no excuse anyone should have an issue getting started into the world of day trading. I also love that it's infinitely scalable. There's no competitor out there you're fighting with. There's no secret I have to keep to myself, because if it gets out there, a competitor can make for cheaper, and I can just keep scaling it up. I can keep growing my account. I can keep making more money if I so choose to. It offers unique advantages that other businesses don't have. Recently, we had all these talks about tariffs, and all those businesses that are importing from other countries like China are getting destroyed. But us as day traders, it brings us a ton of opportunities. The more volatility, the more opportunities for us to capitalize on. We're not betting on just one stock to go up. We're betting no matter if the market goes up, down, which stock is doing better, which asset is doing better, gold, NASDAQ, S&P 500, it does not matter. We can capitalize in any way, form, or shape. Let's go over the fundamentals of day trading. All day trading means is simply entering a position within a day and closing within the same day. Whether it's a 5-second position, 15-minute positions, 2, 3, 4 hour position, it doesn't matter. If you're buying and selling it within the same day, it considers as a day trade. The main advantage of why I like this over other things like swing trading, where you're holding a trade for a few days, it doesn't expose you to overnight risk and stress. Trust me, I've tried swing trading, and the worst thing can happen is you're just up all night checking your positions, and you just can't enjoy your day until you close the trade. While as a day trader, you enter, you sell, and you're done. Whether it's good, whether it's bad, you already know the results, so there's no point in stressing out for the whole day about a single trade. You can trade multiple different markets: gold, forex, crypto, stocks, NASDAQ and the S&P 500. And the key to success isn't predicting what the asset is going to do, but rather reacting, waiting for the market to show you what it wants to do, and you capitalize on a small move of what the market has already shown you. We've all heard 95% of traders fail. But why do they fail? It's because most of them lack the basic knowledge and the basic fundamentals to get started. Imagine I put you to do a surgery on somebody's leg, but you've had zero experience. That's what these people do that are considered failure of day traders. They put $500 in a Robinhood account, and they'll take a long position on a random stock they read on Reddit. Does that really make them a trader? No, it doesn't. Why? Because they didn't master the skills. They didn't actually learn before they dived into it. But because the barrier of entry is so easy, you can download an app and just deposit some money into it. Too many people do it for fun, for gambling, the way they see going to the casino, and it gives day trading a bad rap. Successful day trading requires mastering your emotions, no over-risking, no over-leveraging, and building a systematic trading plan that you know over time gives you an edge to the markets. The beautiful thing about day trading is that you don't need a lot. You don't need thousands and thousands of dollars of inventory. You need a laptop or a phone, and all you're gonna need is a broker and a charting platform. A lot of times they're combined. Your broker could also be your charting platform. What I personally do and recommend, use TradingView. That is my charting platform. It's a free trading platform that you can chart and you can analyze charts on. It's free to use, has a ton of different tools, and a huge community of traders that use it. All you're going to need to do is go to tradingview.com, create a free account, customize your charts the way you like it. This is how I personally have them, and set up your favorite indicators and drawing tools. Now let's talk about brokers. There's a lot of different brokers out there depending on where you're in the world or what kind of assets you're trading. My two main brokers are TD Ameritrade, that's where I trade options, and Hero FX. That's where I'm trading CFDs mostly. Now I'm not telling you have to use the same ones. There's a ton of great brokers out there like Interactive Brokers, Trade Zero, a lot of other CFD ones you can go out and try. Just make sure you read the review, find a broker that has low commissions and good spread. TradingView as well as the other brokers I mentioned all offer paper trading, which means you're trading a demo account of fake money. This is how everybody should start. Start with paper trading to one, get familiar with the broker, and two, start practicing some of the basic skills as you're learning. Let's understand the basics of charts. Price is read through charts, and charts are a representation of the price on all different time frames, from 1 minute, 5 minute, 15 minute, 4 hour, it does not matter. I've always said this, all the charts are telling us is showing us the human emotions in price format. We all know human emotions are repeatable. People feel FOMO, people feel fear, people are buying and selling. And all the charts are showing us is understanding what emotions are currently. And since emotions are repeatable, we can find patterns through the charts to take trades. Candlesticks have 4 key parts that we care about: open price, closing price, the high, and the low. And the fifth hidden one that I like to call the halfway point of a candlestick. Very simply, you see a green candle, it means price goes up. You see a red candle, it means price goes down. As day trader, we can benefit either way. If we take a long position, it means when there's green candles, we make money. When we take a short position, it means when we get red candles, we make money as we're short selling a certain asset. Time frames of candles just show you what price happened within that time frame. A 1 minute candle will show you price within 60 seconds. A 5 minute candle will be 5 1 minute candle put together. And these you can scale up to 15 minutes, monthly candles, weekly candles. A weekly candle will show you the price action through a whole week. Typically, the way I trade, I'm looking at different time frames. All the way from monthly to weekly, I'm looking for an overall macro trend. While the 4 hour to the 1 hour, I'm looking for overall day and weekly trend. In the 15 minute, I'm looking for entries, and the 1 and 5 minute, I'm looking for my exact entry, stop loss, and take profit targets. When should you be trading? The market is moving between 3 hours a day if you're trading futures. Well, the sessions are divided in 3 different sessions: New York, Asia, London. No one session is better than the other. Now, I personally trade the New York session open. I'm usually trading when the Nasdaq also opens at 9:30 a.m. EST, all the way to usually 11:30 a.m. EST. But all the different sessions have different characteristics that may be better for the style of trading that you decide fits you the best. Asia session is known for being a smaller move, lower volatility, which, as a beginner trader, maybe you're scared of jumping into big move type of day like you might get in New York, and it's good to get started and get your feet wet. Now, London session is usually better if you're trading Forex pairs, which personally I don't trade. Is actually the session I trade the least. Because also, depending where you live, it will, be adjusted to if you're sleeping for the day, if it's 4 in the morning, 2 in the morning, 9 a.m., 10 a.m. And then we have New York session. It's usually best for indices like the Nasdaq, S&P 500, the Dow Jones, or if you're trading US-based stocks. It typically also has the most volatility and the most news. So it can be kind of scary to get into the New York session if you're a complete beginner. But if I had to give you a piece of advice on the best time to trade, is usually when London and New York overlap between 8 a.m. EST to 12 p.m. EST. That's when you're gonna have a lot of opportunities, usually good volatility, and most red folder news that add to the volatility. Like usually we have at 8:30 a.m. red folder news, or we have 10 a.m. red folder news. Now, you don't want to trade while the news is happening. You want to wait for the aftermath of price showing you the direction it most likely it wants to go, so you can take advantage of that. Now, don't feel the need that you need to be watching the charts all day long, or you even need to trade every day. Trading is one of the only jobs that doesn't reward you for the amount of hours you spend, or rather just on the results. If less trading means more money, take that approach. It's more about quality, not quantity. Let's go over my core trading concepts. The way I trade is mostly based on 3 different concepts: fair value gaps, Fibonacci, and liquidity sweeps. Let's go over fair value gap. Fair value gaps are simply imbalances in the market that has been made. It's where usually there's very low activity because there's only buyers or only sellers. This creates an imbalance that later we can use for potential entry, stop loss, or take profit target. They also provide high probability reversal zones and high probability continuation zones based on how you use them. I really love them because they also work on all time frames. Now, liquidity sweeps is where most traders get trapped. Imagine this, you see a bunch of traders take a long position because they think a stock is breaking out of a certain area. It's pushing above a price, and quickly that candle flips and turns red and goes down, and everybody gets trapped. Usually when most traders get destroyed is when I'm looking for entries. So being able to analyze the charts and understand where these liquidity sweeps are happening is a key component to turn profitable using my strategy. And lastly, Fibonacci's. I use Fibonacci's to look for continuations of a trend. I don't want to FOMO in and buy at the top of a trend. I'm waiting for retracements. Fibonacci gives me the ability to wait for this high confluence retracements opportunities that gives me high risk reward and high win probability. And this is why I keep telling you guys that quality over quantity is the name of the game if you're trying to get started in day trading. And the most powerful trades for me happen when they all line up. We took out liquidity with a liquidity sweep, build a bullish for value gap, then we retrace into my Fibonacci for a high risk to reward entry, and we take full TP and make a bunch of money. Now, what is the risk management that you should be using when you're trading? Risk management is not fun, it's not exciting, nobody wants to talk about it, but you have to master it to get good at trading. If you're a beginner, stick to only risking 0.5% of your account. Me personally, I'm risking between 1 to 2%. If maybe there's a really solid setup, I'll go all the way up to 3 to 4%. But realistically, that's where you should be most of the time, 1 to 2%. If you're just starting out, getting your feet wet, start small. Don't worry, the market is not going anywhere. Start at 0.5, and slowly, as you feel more comfortable, as you start getting results, you can scale that up. Any trade you take, you should always know 3 things. That's how you're going to be able to define your risk: your entry, your stop loss, and your take profit. Make sure that all of those make sense and give you a positive risk reward. Don't enter a trade and then figure out the stop loss later, because then you're not going to be able to follow your plan. If you need it, make sure you use a position size calculator to identify your risk. And the way I trade, I have different setups that I trade. The more a higher quality setups I have, the more I'm willing to risk. So if I have an A+ setup, I risk my max 2%. If I have a C setup that I'm like, hey, this could work, but I'm not so confident in, I'll take it down a notch and risk 0.5%. Imagine you're playing blackjack and you have an 11 and you have your opponent showing a 4, which is the house. On that 11, you wanna always be able to double down that trade. Hopefully you get a 21 and you make a ton of money, right? The same applies to trading. When you have your highest probability setup with the best win rate, the best risk reward, it makes you the most money. Those are when you wanna size in a little bit more and take your full position sizes. While if you're experiencing a period of drawdown, when you're like, hey, I'm really struggling, I want you to take down your risk from 0.5 to 0.25, from 1 to 0.5, half it. So trading is a lot about momentum, is a lot about having a confidence in yourself. And after 5 consecutive green days, you can up your risk size again, right? Build that confidence back up. Don't fall down the dark spiral of like, oh, I'm not good anymore. I'm catching all these losses now. I want to give up on it. Don't let yourself get caught up in that. Most of that happens because we are seeing the big red days, right? If it's small red day, break-even day, small green days, those are completely fine. They're not gonna like upset you. They're not gonna send you in that tilt mode. But when you start having big losses back to back to back, that's when you go in that tilt mode, and we need to avoid that as much as possible. Now, how do we get started with minimal capital? You're like, Antonio, I have no money. I have $500 to my name. How can I start day trading? Day trading, I heard, takes $25,000, if not more. Well, the truth is, nowadays in the trading world that we live in, we have something called Profirms. Profirms allow you to, for as little as sometimes $50, take a challenge. So they give you, let's say, $50,000 account, and then you have to pass a set of rules. And if you do, you get onto the funded stage. The funded stage, now, if you follow those rules, you can get payouts. Recently, I got #1 place in Alpha Futures Capital. Their futures Profirm. I made over $15,000 for the week, and I withdrew $10,500, because the split was 70% to me, 30% to them. The $100,000 account I used to make that $15,000 only costed me $89. So just do the math on what is $89 return on 10,500. That's probably better than going to the casino and trying to test the slot machines. So if you do want to get started, I am partnered with Alpha Capital. I think they're one of the best platforms out there. If you want a nice discount, just use code BGC. Go type in Alpha Capital Group, put code BGC when you check out, and you get a nice discount. I recommend all beginners to always get started with Profirms, even if you're like, hey, I have a bunch of money, right? I have $100,000 in my savings. Just because you have the money doesn't make you a good trader. A lot of times what I've found is my students that have a lot of money and they just want to jump in with a huge sum into trading, they have the worst results. Why? Because they're, again, only focused on the money, and it's hard not to focus on the money when you're risking a lot. You want to focus on the skills. So even if you have money saved up, please take the Profirm route. It's much safer. Even if you lose the account, you don't pass the rules, you're only going to lose less than $100, which is totally fine, because it also gives you rules. What I like about Profirm is they gives you rules that you have to abide by. You can't lose more than 3% of your account, right? It forces you to follow a risk management plan, which builds the right fundamentals. And if you're just starting out, it's actually one of the best places to be as a day trader. It's much easier for me to teach if you're starting out because you have no bad habits. But changing somebody that has had bad habits for 5 years and turn them into good habits, it's much harder. So build the right fundamentals, and I think Profirm is a great stepping stone. Once you're able to get consistent results with Profirms, then you can move on to your live account. And trust me, I have students like Matt that has made over $40,000 in a single month in payouts. Or I have students like Adrian is up well over 6 figures in payouts and one of the top 25 traders at the biggest platform out there, which is TopStep. Now, how do we develop a trading plan? A trading plan, it's your roadmap to consistent results. A trading plan needs to always include entry criteria, which will be all your confluences, risk management rules. How are you gonna manage your risk based on the entries that you take? Exit criteria, when does it make sense to exit your trade? You should have a journal type of trading plan always next to you, whether it's a sticky note, you write it down, you put it on your computer, or it's an Excel sheet, or it's a notebook, what it was for me for many years. You should always have it next to you that you can look at it, and it has your rules on when you should enter, when you should exit, how you should risk, the mindset you should have, and affirmations to remind you to stick to it so you can have the proven results. Stick to the consistency. Without it, we're just guessing. Without a trading plan and an exact entry criteria, we're just guessing. We're just as good as going to a casino and betting on black or on red. On top of having a trading plan, you should be journaling every trade you take. You should ask yourself, why did you take that trade, risk reward that you had, your entry and exit criteria, and how that trade played out. Building that, it helps you build a database on helping your trading plan filter out the best trades you take, the worst trades, and how you can adjust it to have the most efficient and consistent results. Now let's talk about psychology. 80% of trading is all right here in your mind and having the proper mindset. The most common psychological issues that traders have are FOMO, fear of missing out, analysis paralysis, where they analyze so much, they have so much information on their chart, they don't know where to trade. Revenge trading, after a loss, wanting to make back to trading. Gambling, where they're addicted to just the P&L up and down. You need to prevent yourself from falling trap to all those demons that to some level all traders fall trap to. To build the right mindset, you should be focused on the process, not the results. The people that are only focused on the P&L, they'll have a really hard time to ever see results, unfortunately. You have to be okay with losing. Understanding losing is part of the game. Imagine you were part of the squad that was in the Lakers that three-peated with Kobe and Shaq. They still lost games all those years. It's not they went undefeated every single game. So understanding losing is part of the game. You'll have some losses, but at the end, you'll get to the championship. The championship is you being consistent and you being profitable and making money in the markets. Always remember, you have to trade the plan, not your emotions. And journaling helps a ton. Helps you reflect on the good wins, and it helps you reflect on losses on what you can do to get better. Always remember that trading is a marathon, not a sprint. So if you think you'll be profitable in 3 months, please don't go into trading with that mindset. Be okay with taking some time. Good things in life always take time anyway. If you implement exactly what I said in this video into your own trading, you're gonna be miles ahead of traders that jump in without the proper direction. For those who want to accelerate their trading and work with me directly, check out my mentorship program. I work with a small group of traders that want to master their trading and apply these exact concepts I've told them without the years of trials and errors that it took me. The link is in the description. Thanks for watching the video, and I'll see you guys in the next one.